Welcome, everyone. It is our March Zoominar, and this is Jessica Medina. Hello, I'm a former lawyer turned accredited financial counselor, and I host these financial meetings every month on a different topic. This month, we have the pleasure of hearing from Lisa Niser. She's going to be helping us think through all of the tax issues that you have as both a W-2 employee, but also maybe transitioning into partnership, or if you're running your own law firm. There's been so much going on in the tax world over the past year or so. So getting some updates on that is going to be wonderful. But I want to give Lisa a chance to introduce herself. And just so everyone knows, again, for these Zoominars, we give ourselves about 45 minutes. We're going to be doing a bit of Q&A between Lisa and I, just to give you some foundations in the tax environment. And then we'll save time for Q&A at the end. This is being recorded, so if you aren't able to stay the whole time, don't worry, you'll get a copy of the recording in your emails tomorrow. But without further ado, let me introduce Lisa Niser. Lisa, tell us how you got into tax and a little bit about yourself.
Okay, well, like you, this isn't my first career. So I went to school. I was a shoe buyer for Marshall Fields, which doesn't exist, but it's dear to my heart as a Chicagoan. And I wasn't able to do that long because they were bought out by Dayton Hudson. I didn't want to move, so I moved into the stores. Was very successful in the stores, but I got a really big wake-up call at age 23 when I got laid off because they were doing layoffs, and I was the newest employee in the store as a part of the management staff. And it didn't matter that my department was very, very profitable. I had no turnover. I had great morale. And there were middle managers sitting in the cafe all day downstairs. I was the one that lost my job. That was a real wake-up call as a 23-year-old. You're like, wait, I did everything right, but it's just not there. So then I did some other buying. I bought for Spiegel catalog and was in the stores. And then I'm like, you know what? This lifestyle is not going to work for me. It just, it's like, I love working with people, but retail, the hours are when other people are off and the pay's not great. And I'm like, okay, what can I do? Well, when everyone else grew up playing like teacher or doctor, I grew up playing tax preparer. I am the third generation female in my family in the tax business. My grandma did taxes back during the war in the back of my grandpa's soda shop, dressed to the nines with her cigarette. And, that was the thing. So it kind of is in my blood. And I thought about it and I'm like, look, it's the same kind of number analysis that the buying is that I liked. And it's a great field. There's always a need for it. So I went back to DePaul, got my master's in tax, schmoozed my way into Ernst & Young. I'm not sure if that's possible anymore, but I am a good salesperson. And spent time there at a local firm and then at PricewaterhouseCoopers, always doing individual tax, which I love because everybody interacts with taxes every single day of their life. And we're not taught about them. And so they're really scary, right? Because it's like, you don't know about it. It's scary to you. So I started my own practice. I'm now going on my 19th tax season. I'm not that old. I don't know how that happened, right? Right after my son was born. So I understand about being an entrepreneur. I understand about getting yourself financially ready to make a huge shift. I understand about being an employee. I understand about being a business owner. I'm a parent. I've been through it all. I mean, we're doing college applications like you pretty soon. And it's an interesting perspective on life that I love sharing with people. So I'm very excited to be here.
Oh, thank you so much for joining us. I mean, taxes really, they do touch every single part of our life. And the more that I hang out with accountants, the more that I realize, wow, every single decision I make could have a tax implication. There is a way to put it through the tax filter. And what do I think about that? But so it is such a huge area. We can't cover everything, right? I would have to have Lisa on here for all of my Zoominars all year long. We still would just scratch the surface.
And we'd lose everybody. Their eyes would roll back. I mean, come on.
I mean, you know that you and I could talk about it really for 12 months straight and it would be perfectly fine. But that being said, what do you think are some of the most important issues that professionals should be thinking about when it comes to their taxes?
I think the biggest one is understanding how withholding works, because people are always like, well, I'm withholding the most, or why do I have a balance due? Or I tell people that W-4 form is the most confusing form they have ever created. I don't understand how it can be so confusing. But I think people don't understand. So I'm just going to take a very brief moment to explain it. So when you have a W-4, whatever so like, let's say you're paid twice a month, they take your pay for twice a month and they annualize it, right? And then if you take, like, for example, the married standard deduction, take out the standard deduction, figure out the tax on it, divide it by the number of pay periods, and that's how much they withhold. So if that was all you had for the year on your tax return, you're married, your spouse didn't have anything, you'd come out exactly even, right? Well, who has that, right? You have bonuses, your spouse has stuff, you have investment income, you have kids, you have itemized deduction. Like, it doesn't work, right? And so it's just based on that income. Now, if you get a bonus, that's not how that's taxed, because you're not taxed on that every period, right? So it would make even this like ridiculous tax bracket. So they just withhold that at a flat 22%. Well, as you start to do well, you're not in the 22% bracket. So right there, you're going to be short, and the base stuff is taxed without that. So that's taxed lower. And then you add your spouse's income on, that's withheld at their lower rate just on their own. And you can see where it gets like, it's easy to not have it. What I do with my clients is, honestly, I do a projection using all their information, and then I work backward and tell them what to put on there. The new form, I absolutely hate. They did it to kind of take into account that multiple jobs or other income. But here's my thing. I don't think that's any of your employer's business. It should not be on that form. So I just work backward to like tell you what to put on there, because you should be paid based on what you should be paid. It's none of their business. They were trying to make it work, but even when they asked accountants like what they thought of the new W-4, they were like, no, it's terrible, just terrible. But so that's really confusing for people. The good news is you can change that form as many times as you want at any point during the year. So it's never too late, and you can back end stuff. So I back end a lot of withholding for people, and there's a lot of creative things you can do if you're working with someone. As long as you have paid to withhold from, there's a lot you could do with it. But that's probably one of the most confusing forms, honestly, out there. And people are always like, but I withheld the most. You can withhold it all. Even if you put 0, like when we used to have exemption, you can withhold more than that. So there is never most. They can take every single penny you have out. And I think that alone will help a lot of people just get the help they need. So I hate surprises. You owe what you owe, but like, I hate surprises.
Just to clarify, when you say back end, what are you referring to?
So for me, for example, I'm self-employed. My husband is an employee. I don't like to pay estimates because I think it's annoying every quarter to have to remember to pay stuff. So what we do is, once my husband maxes out on like his Social Security and his 401k, I submit a new W-4 form, right? And I move all those dollars to federal and state by filling out the form. And then there's a line that says additional amount you want withheld per period. So literally at the end of the year, sometimes we get no paycheck, but there is no penalty in terms of calculating the estimates by back-ending it. So there's a lot of creative things when people come to like, oh, I didn't pay, I didn't do this, I didn't know. I'm like, if you have a source of withholding, there are ways that you can make it work. Now you have to remember in January to submit a new one so that you get a paycheck again. They always laugh. They're like, your wife's an accountant, isn't she? I'm like, yeah, But if you get it, so like we just spend the cash that I take in and just take all the taxes out of his. So it's a matter of understanding your cash flow, but it gives you a lot of flexibility in there. I mean, I do a lot of productions with people in the fall. And so there's a lot you could do. Or, a lot of companies also will let you take more withholding out of your bonus if you're aware of it. So that's a great time to do those projections and just, let's say you had investment income, or you had some other income, or you had nanny tax, or you can cover that. You don't have to pay estimates for your nanny either. You can just adjust your withholding to cover that. They don't care what source that withholding comes from, as long as on your return it's there. So it doesn't, like if you're self-employed, you don't have to necessarily pay estimates. And I think I try to make it as simple as possible for people. Life gets confusing enough when you have kids in your own job or multiple. I'm like, let's just keep it simple. It doesn't have to be that hard, but that form is like ridiculous. I don't know why it has to be that difficult.
That is that's a really great point. And I hadn't even thought of that. My husband has been called back into the military, but we had such an issue because he was retired and he was receiving a pension and they were not taxing it appropriately. And so I had just been kind of, we'll just save up for our tax bill at the end of, when it comes, but this seems much better. We can proactively,
yeah. Well, and also, the U.S. is on a pay-as-you-go system. Okay, and that makes sense because can you imagine if they just let us all pay our taxes on April 15th, the way people manage their money? I mean, it'd be a disaster, right? Like just a complete disaster. And most people don't think about that because they just have withholding and they get their net pay and they're like, okay, this is mine. Well, if you have to pay in estimates, not only do you have to have a certain amount paid in throughout the year to avoid a penalty, because they said you have to pay throughout the year, but you have to have a certain amount paid in each quarter, right? Well, if you pay in estimates, you could end up with a refund on your tax return, but you could be short in the first couple of quarters, right? So by doing this, for some reason, I don't know why there's a fluke in the tax code, but withholding is deemed ratably withheld throughout the year, even if you back end it. So this is like a fantastic little trick to spread it out. So don't not pay it, just take it out of something if you have it, because okay, taxes are bad enough, but you don't want to pay a penalty, that's horrible, right? And the good thing about doing a projection also is there's no surprise. So I think paying in enough to avoid the penalty, but saving the money and having your use of it till April 15th is the smartest way to do it, right? But I don't want any clients surprised on April 15th saying, hey, Jessica, you owe $8,000 or $40,000 and you have to go sell some holding that you didn't want to sell, or you know what I mean? That's terrible. So knowing it's there is fine, right? It's just being smart about your money.
No, I love that. So that was pretty into the weeds on withholding.
Wow, all that on one form, right? But that's seriously, it is the most misunderstood form out there. I swear to God. People are like, oh, I had it. I'm like, well, and the other thing is actually, we could bring it up is, if you had unemployment this year, that's taxable to you on the federal, most states as well. And it makes sense. I mean, it's a replacement of wages. So it makes sense that it's taxable. But people, even if you request the most federal withholding, the most they take out is 10%. Okay, most of us are not in the 10% bracket. So again, when you dump that on everything else, you're probably short on that. So don't, and if you're unemployed, you're probably not saving money. So you don't want surprises are the worst. My line now is your tax return, if you're doing it properly, should be like your annual review at work. Okay, you never want a surprise. It should be something that was discussed during the year and given you an opportunity to address it. Right? If there's a surprise, something's wrong. You need the tax return is the least important part of what I do. It's the conversations, right? It's the learning. It's having me on speed dial to say, hey, I got a new job. What do I do with this W-4 form? You know what I mean? Because that's the value in what you're paying for with somebody.
Yeah. So with your clients, Lisa, are you having those conversations in the fall? I think that most people have the impression that everything about taxes should be done between, February and April. And it's the only time of year that we think about taxes. It's the only time of year we put
No.
Talk to me about your process so people
so
can.
My clients call me every day of the year. I swear to God. I tell people, like I just said, the tax return is not the value that I'm providing. It's having me on speed dial. And I want to help them make informed decisions. So whether I think it's the right decision or not, at least they understand the financial ramifications of what they are choosing and it works for them. So my clients, I get calls and emails every single solitary day of the year. They reach out and I've taught them. It's just reach out, just call. Part of my fee is for calling me and they reach out. And it's questions on everything and anything related to money. I mean, it is, and it's such a low price to pay to have someone just do that. I mean, whatever your skill is, you're really good at it. There's lots of things I'm not good at. Focus on that and invest your time. Whatever you pay me, you're going to earn more doing whatever you're doing. And most of the time I cover my fee, which most professionals do. You know what I mean? It's I'm going to save you either headaches or penalties or just taking advantage of stuff or just getting you on the path that you want, I think is a big part of it. But yeah, no, you should be talking to your accountant and your financial advisor and you all the time. That's what you need. You need a team of experts to support you. Someone did a great show on you need a personal board of directors to help, kind of keep you in check and support you. I'm all for that. The older you get, you're I need all the help. Hey, come and help me. Yeah, please do it. I have no problem accepting help.
So other than some more creative ways to handle withholding, especially if you happen to have some self-employment stuff factored in there, what other types of things should professionals think about in order to maximize or I guess minimize the taxes that they're paying?
Right. So one thing is, and it's funny because one of the things I do with people is I'm like, do you understand what all these numbers on your W-2 mean? And people have no clue. They have no idea. Well, I could tell you a lot from the W-2. And one of the things I see is, are you maxing out on your retirement plans or your other benefits? So if you are not, I really, really encourage people to take advantage of all those pre-tax plans, or especially if you're a higher income taxpayer and your plan offers a Roth 401k, you should definitely look into that. Yes, you are paying the taxes today on that, but these are the lowest the taxes have ever been. I've been doing taxes for 25 years, and given what's going on, there is no way they're not going up. I mean, guaranteed. So, and with a Roth, everything comes out free at the other end, and you're not required to take it out. I mean, it's fantastic. So I really encourage you, if you have that option, because most of the people that I work with are not in an income level where they can make Roth contributions. It's fantastic. So yes, your tax today will be higher, but you're saving. You can't just look at today. You have to look at the long run, and it will really do that. The other one is if you have the opportunity to participate in an HSA plan, so that's different than a flexible spending plan. If you have a high deductible insurance plan and you have one of those health savings accounts, that is seriously the best vehicle they have ever created, because the money goes in tax deductible, it grows tax deferred, and if you take it out for medical expenses, it's tax free. Now, here's the thing that's a newer kind of way of looking at it is you don't have to take that money out. So if you have money to pay those out-of-pocket expenses elsewhere, that's a retirement account for medical expenses, right? Who's not going to have that? And it's all going to grow free, right? So we put our $7,000 in every year. It's going to grow. You can go and invest it. So make sure you pay attention and invest it. It's another retirement plan. And that's fantastic. I mean, because I was putting it in, take it out. I'm like, wait a second, that's not a good idea. And I actually like the high deductible plan because we can completely budget our medical costs. We know what the premiums are and we know what our max out of pocket is. And with a family of 4, we hit it. And then everything else the rest of the year is covered. And I know, and I just go get the help I need. And so it's really easy in my budget line. It's like, I know I'm going to max out, boom, that's what it is. So don't shy away from that. It's also really good if you're young and you don't have a lot of medical expenses, because you're only paying for what you need. The premiums are a little lower. It's like, look into these benefits that your employer is providing, and make sure at a minimum you're contributing to those retirement plans up to the employer match, because that's free money you're just leaving on the table if you're not taking advantage of that one.
Yeah, there are a lot of, I think, employee benefits that you get the booklet when you show up, right? It's a binder full of benefits, and maybe you just kind of think, oh, well, what benefits did I have at my old job, or what benefits did my parents have? And you just kind of do a little bit of digging, but there is so much wealth there to be taken advantage of if you can understand what all of
right.
are, right?
Right. I tell people I translate from taxis to English. I mean, HR benefits are kind of the same way. The other one is your employer can write off as a business expense up to $5,250 of education expenses for you if it's related to your work. So it's not taxable to you and it's deductible to them. So maybe if they can't give you a bonus or a raise you want, that's something you can talk to them about. Is there a certification you want, or a class, or something else? Those things are all valuable, and you are definitely benefiting from that. So don't write off those things like that, because they're really quite valuable to you.
And that benefit is really interesting because under the CARES Act now, it can actually be used to help pay down student loans, both federal and private. There are so few programs that help you pay down private student loans, but until December of 2025, this $5,250 can be used for student loans. So if that's a conversation you need to have with your employer, you want to have it sooner rather than later. But so
right. It's got to be in their plan documents, so it might take a little while, but I'm sure everyone in your company will love you if you bring that to their attention. Mm-hmm. So that's a big one. The other one is, I want to let everyone know that the IRS is very big into identity protection. It's a huge, huge problem, especially with small accountants, because think of all the information that I have on my computer for clients. I mean, I'm so careful with it. So they have what's called an identity protection PIN, IP PIN, okay? And it used to be people that had an identity protection problem with the IRS would get assigned this. Everyone can now apply for one. I encourage you to do that, because no one can then file for you without this PIN. And I will tell you from experience, if you do get your identity stolen and someone files for you, even if you have a refund that's not your fault, it will take forever to get that refund. I mean, you don't want that to happen. So you can go in, if you go to the IRS website, type in IP PIN, you have to go through, a verification process. But it's also part of everyone has an account with the IRS that now they finally have expanded to give you access to like valuable information. States have had this for years, but everyone should go in and set up their account, verify their identity. Then you can see your stimulus payments, you can see your estimated payments, you can see information from your tax returns. There's a lot of stuff where, instead of staying on hold with the IRS for hours on end, which you can never get through to anyone, you can do this. And then once you have that account, you can sign up for that IP PIN. And it's good for 1 year. So each year you have to do it so someone can't steal it. And I just think that's smart. You don't want to have that. And also if you are interviewing tax accountants, you should ask about their security procedures. I mean, nothing should be emailed to them. Everything should be through a secure portal. They should have a shredder. They should have software to protect the stuff. I mean, that should just be a given for people. But I still have clients, and even though I tell them, I'm like, you have to go through the portal, email to me. I'm like, look, I can only do what I can do on my end. Everything comes out through the portal, but I'm like, please put it in the portal. Please put it in the portal. Because that's just a big issue right now. And I mean, accountants are huge targets for it. Because I mean, it's, I even had a unemployment claim filed on me and my husband, a fraudulent one. And so if you had that and you get the tax form, you need to go back to your state agency and get a corrected form for that. Because otherwise the IRS is going to be looking for that income. So you need to go back and get that taken care of. And that hit a lot of people this fall.
Yeah, with all of the additional benefits, all of the fraudsters are out there trying to grab up.
Oh, they're smart.
Be using the benefits, and they'd like to use them on their behalf. So speaking of 2020, we had a lot of changes coming out in the tax world. Lisa, what are some of the biggest ones that we want to be paying attention to for folks who haven't filed their taxes yet this year and are
most of us haven't? Come on, you're not, please. I mean, the forms are just coming out. So you're fine.
Oh, I took your advice, Lisa, and I said, I'm waiting for all the legislation to wash out. I will have my things ready to go.
Right,
I'm not pushing file until we have final word on everything.
Right. I know. And who knows? So right now, as of right now, there's no extension on the tax deadline. And I really, at this point, don't expect there to be. I would think that if there's any stimulus or anything else, it's going to be pushed to reconcile on next year's tax return. But one new one is, if you are not able to itemize your deductions due to the higher standard deductions, they are trying to help people give back. So on every return, you can deduct up to $300 of cash contributions. It's got to be cash, not clothing. You need to have the receipts. It's line 10B. It says, charitable cash. And that saves you federal and state tax on there. So don't miss that. Now, they did correct that for 2021. So single taxpayers get $300 and married taxpayers get up to $600. But for 2020, it's $300 for everybody. So, no one checked that one when they put that through, right? Another one that I get a lot is two. One is, if you worked at home last year, like all of us did, and you're a W-2 employee, there's no home office deduction for W-2 employees. Now, before you get all up in arms, and the same with job search expenses, okay, none of that's deductible anymore. Those were both in the same category called miscellaneous itemized deductions subject to a 2% floor. So one, you had to be able to itemize, which a lot of people aren't able to do because of the higher itemized deductions. And two, those expenses had to total more than 2% of your income. Nobody got it before. So don't be like, oh, you didn't get it before. Okay, so even though they removed it, it wasn't there. Now, if you're self-employed, yes, you probably can take a home office deduction, and there's other things to talk about with that. But those are two I get all the time. Now, I tell people too, same thing with that. But you're spending less money in other ways. So there's benefits to that. So don't get all up, but yeah, that's just not there. One thing that is cool for 2021 is when they let us all out and we can go eat together again, they're trying to help the food industry. So meals, instead of being 50% deductible, will be 100% deductible for those of us that are self-employed. Hopefully they're still reimbursed by your employer if you're an employee, but that will be very nice. So that's encouraging to go spend face-to-face time with clients and other business professionals, and you can write that all up. So that's a nice one. We covered unemployment. Stimulus funds are not taxable to you. However, if you did not get everything you were entitled to, there is a recovery rebate credit which reconciles that. And through that account on the IRS website, you can get the exact amount you got for your first and second payment, and you will get everything you're entitled to. So, you know, like I had a couple people, their kids were seniors in college this year. They are independent. They're getting their stimulus money when we file their returns, right? If your income dropped in 2020 because you got laid off, you'll get more money. Now, some people are holding their 2020 returns because they actually made more in 2020 than 2019. So they're waiting to see if the stimulus is based on 2019 or 2020. You could decide what you want to do with that. I have my own opinion on that. But some people are holding it for that because they think they'll get more money, you know, if these were 2019 versus 2020. So we'll see on that one. And then if, let's see, PPP loans, I don't think a lot of people on here have it, but they finally did decide that if they're forgiven, they are not taxable and you can deduct expenses that you used for it. So for accounting purposes, it's going to be a heck of a lot easier. I'm not an accounting expert, so where you put those funds, you'd have to ask your bookkeeper, but it's not taxable.
So other than, right, 2020 and 2021 might be kind of crazy, and we all might be making mistakes if we're trying to do this all by ourselves just because of all of the changes. But what are the biggest mistakes that you see when folks are doing their own taxes? What do you kind of, when they eventually come to you or when they ask, I've done this, was that right or not? What are the big ones that you see?
The biggest thing I see is underpayment penalties because they don't understand the withholding. And also there's another way to get rid of those penalties is you can enter your withholding as actually withheld. So if you got a big bonus in Q1, for example, there's a way to go in and show your withholding for the first quarter. And even though it's, you don't have to ratably spread out the income, you could just put the withholding where it is. That can reduce things. So things like that I think are interesting. Also, if you are like self-employed or you're on a commission and your income is not steady, you can annualize your income. So if you didn't earn a lot in Q1, you don't have to pay in a lot in Q1. You can pay it as you go. I do have clients that literally every quarter we do a projection and they pay on that because it costs them a lot less to pay me quarterly to do those projections than to overpay or get a penalty. Right? So there's a cost either way, but it's what works for you. And that's probably the biggest thing. People just like miss stuff that's there. Large refunds, terrible, 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 because the government is giving you no interest on that money. And let's say you have an emergency and you have to go use credit cards. And that's your money. Like, what are you doing? Right? So I bet you probably help people as well is, you know, you can request that your direct deposit go into multiple accounts. So like but this is my spending account and this is the money we don't talk to. I mean, there's ways so that you have control over it. I cannot stand big refunds. Like it makes me crazy. Like why? So people don't leave without a new W-4, whether they turn it in or not is their choice. But big refunds are not a good idea. I mean, really, it should be as close to even as possible. Or like I said, paying in enough to avoid a penalty, knowing how much you owe, and then paying with your return, to me is the smartest because you have use of those funds. When the market's great, you have the use of that money to do whatever you want with till April 15th. It's smart, right? But you have to be more on top of it. And often that takes someone helping you pay attention to it and stay on top of it, right? It's not something you do on yourself. Deadlines. A lot of people sometimes will miss deadlines for estimates. I didn't realize I send out reminders every quarter. I didn't realize not every accountant does that. I had no idea. You know, the penalties for filing late are like 10 times the penalties for paying late. Okay, don't miss deadlines. Even if you can't pay it, send it in. They are much nicer at working with you if the stuff is in versus you not doing what you're supposed to do. And that's just easy, right? Like, but here's the thing, like even me, it's like, I don't want to pay my taxes. It's not the top of my priority list. So it's like having someone on June 1st say, hey, by the way, estimates are due in 2 weeks. And it was like, I'm on the ball. My clients are on the ball. They're like, I'm on the ball, I get it. So that's a big one. Don't miss those deadlines. And then for self-employed people, a lot of the times they'll put stuff that is valid just in the wrong place and it flags stuff, right? So the IRS has these like audit guides. And so they know like for certain industries, this is pretty standard right here. And if something looks off, then they're going to go look at it. So knowing how things work and how to list it and how to write requests for penalty, speak in their language, definitely helps you get what you want from the IRS. That's why, like, if you ever get audited, you absolutely positively need someone to represent you, because I know how to talk to them in their language. It's kind of like going in front of a judge. It's like, you have to speak to them exactly how they want. You do not say anything else, and that's it. And it works. But you're going to share all this stuff, and you're like, and it works. So I think those are the biggest ones that I see.
I mean, and I think for, especially for the, filing versus having to pay, there's sometimes a misconception that if you don't have all of the money by April 15th, then it's not even worth it to file because you can't pay yet. And that is not how the system works. But there's such an emotional block, right? To like making, if you're not ready, or you feel like you've done something wrong, or you feel like, oh my gosh, I owe so much, I don't even want to file. If you can at least file the information with them, then you can work on the payment. They're two separate actions. And I think that, making sure that people understand the filing of the information versus the payment of whatever you may owe are two completely separate processes that can, move forward separately, can really alleviate like the biggest hurdle to just getting through what, as you said, the most important part is getting the information to them and not having the late filing penalty then on top of all of the interest that you may owe for not having paid
Well, and I did a post, I think yesterday on LinkedIn with the different ways that you can work with the IRS. They want to work with you. I mean, they want to get paid as much as they can, So there are ways. There's literally an installment agreement that is automatically approved that costs $39. Once your return's accepted, you go in, you say how much you can pay with your return and how much you can pay each month. It's auto debited, and they're totally cool with it, right? And it's a lower interest rate than most credit cards. And then it's just done, and they're cool. People's situations happen. I mean, life happens, right? But don't let it stop them. Also, I tell people, like my software and almost every software, I can file your return now and request that the payment not be debited until April. So don't wait until April 10th to do your return to get this surprise if you think you're going to owe. Do it now so that you understand what's there and you can get the funds together, right? That has completely changed every accountant's life because they don't get slammed on April 10th. But yeah, surprises are not good.
Well, Lisa, these have been such great tips. We have about 10 more minutes left together, and I want to make sure that I give everyone who showed up today a chance to ask their own questions. You have access to a real live CPA. So if you
I'm actually an enrolled agent. I'm not a CPA. And what that is it gives me the same rights before the IRS like a CPA. But because I don't have an undergraduate in tax, I did not want to learn the law, audit, and finance part of the CPA exam. So my test was a two-day test, all on tax, which is actually harder. But because I didn't do that, I didn't want to do that. So I have my enrolled agent's license and a master's in tax. So.
Oh, thank you, Lisa. I'm so sorry. People mess
Don't
up.
worry. Please, it's nobody knows because no one's heard of this. But I'm like, I don't want to learn about audit. I never want to do an audit. Ugh.
Oh, okay. So we do have a question coming in looking for advice for clients paying off lots of money in back taxes.
So can whoever it is explain a little more about what they're looking for?
And if you want to unmute, you can go ahead and unmute too.
Oh, sure. Hi.
Hi.
Hi there. Thanks for these, Jessica. I love your webinars. Just wanted to say that first. And thank you, Lisa. This is the most interesting tax conversation I've ever heard. So thank you for explaining this. So currently working with a client who has close to like 50 grand in back taxes, and we're doing debt strategy right now. I understand that IRS back tax debt is pretty important and high priority to pay off. And I just didn't know if there was any advice on, do you pay this off aggressively? There's some ability there to pay that off aggressively, or like, can you set your own rate at what you pay? Like, I don't know anything about sort of how those plans work when you're making those arrangements.
They really look at what's reasonable for you. I haven't heard that you have to pay it off aggressively. I think as long as you make regular payments, I would recommend paying like student loans or something with a much higher interest rate first. I think their interest rates, I mean, it's like 3 to 5%, which actually is not bad. And none of it's deductible anyway. Most of the student loans aren't anyway. So, I mean, I think people say it aggressively because I think that threat of having the IRS over you is just so emotionally there. So whether it is or isn't, if that's what's bugging them the most, maybe that is the right one to talk about, because, you know, people just don't, they're so terrified of the IRS and they just want to work with you. I mean, if you have a plan, and most of these plans I think are over 2 to 3 years, but like I wrote in my post yesterday, there are offering compromise. If you absolutely, there's no way to do it and you're working with someone that's working with the IRS with you, there's sometimes that they will forgive part of it. They also have a thing now that if you're just in a really bad situation currently, you could request they just put a hold on your account while you are trying to get yourself out of this financial situation, and it won't go to collections or anything else. You have to keep in contact with them, but they really are people. I mean, one of the things I actually defend the IRS 99% of the time, because here's the thing, the IRS does not make the laws. They're charged with enforcing the laws made by Congress, right? And they don't make their own budget. So here they have to enforce all these laws with not enough people. So I kind of feel bad for them because everyone hates them and it's not their fault, right? It's like, come on, people, you know, if you want to make a change, you have to change the people making the laws. I think no one should be allowed to pass a tax law if they can't do their tax returns by hand, because the last tax bill was like, what, 5,600 pages? Do you think anyone read it all? No. I mean, we don't even know what's in there. I don't even know. I'm like, it's crazy. And these guys don't even understand how it works, because most of the people in Congress, in my opinion, are not regular people. You know what I mean? That's why, like, student loan interest, they don't have student loans, right? Like, student loans should be deductible. It's ridiculous. There are certain things in there, like, why is childcare the amount not raised? Because they don't have issues. Like, you know what I mean? So changing who's in there making the laws would have much bigger impact than getting mad at them. But really, I have not heard that you have to pay it off aggressively. It's whatever the plan is that they agree to with you. But I think it's more the emotional side of it that really just people don't want to deal with it. It's really scary to people, even worse than like credit card companies. I think it's like the big black IRS. Not that bad, really. I try to feel like it's fine, it's good. I do a lot of therapy with people.
Well, I imagine it might be the garnishing power that they have. That's a little different.
Yes, that one is true. Well, here's the thing. If you don't respond to notices, they're not going to be nice to you. Okay, so you have to respond and you have to reply with what they want in a timely and respectful manner, right? Because otherwise,
we have more questions.
Why would they work with you? Someone that's not doing that. So not every notice is wrong. You know, like when you get a notice with a bill, that doesn't necessarily mean that it's there, but if you don't respond, it is. So
there's somewhere we could find what the IRS interest rate is on back taxes, because that might help in terms of making the plan. If there's no different rate, if it's just another debt with its own interest rate, if it varies.
Yes, you can look it up. Look up the IRS underpayment tax rate. Right now, I think it's 3%.
Okay, yeah.
I mean, 3 to 5%. I mean, it's really low, relatively speaking. In terms of like, I just, you know, if someone's in that position, they might have credit card debt at 25%. Like, I would pay that off a lot faster. You know what I mean? Okay. They don't work with you, but I'm not an expert in that. So,
well, we have a great question about the Roth 401k and tax benefits of putting money to a Roth 401k versus putting it in the stock market. And I would imagine meaning putting it in the stock market vis-a-vis a regular brokerage account.
Well, you know, your Roth IRA, you can invest it still. I mean,
I'm sorry, the Roth 401k, not the IRA.
Even the Roth 401k. I mean, you're going to invest it in something. There's just less choices. So it really depends on what your overall investment strategy is. It should be, you know, they should be giving you enough decent options that it should work within your strategy. I just think that ability to have it grow free and not have to take it out in retirement is really, really valuable. And it's, you know, what is it? 19.5 is what it is right now. So I think I love Roths. I just think they're great. The other thing is, once you get over 50, like me, you can put more money away in your 401k. You put 26,000 away. So it's kind of nice. And in IRA. So I told my husband, I'm like, oh, we get to put away more this year. I was like, there's benefits to being old.
And so with any of those tax advantaged accounts, the 401k or the Roth 401k, or like Lisa was saying earlier, the HSA, the growth while it's sitting in the account is tax-free growth. So although in a regular brokerage account, you can also have, no real taxes if you're not letting go of any of your investments, right? If you're not actually making any capital gains in that brokerage account, but you may have dividends that get paid out. And so you might have taxes on that. And so when you have money in a pure Roth 401k or a 401k or in your HSA, there are no tax consequences while the money is sitting in there. And for many of those, there's no tax consequence to take the money out either, right? To take money out of a brokerage account, you're going to have to sell a security, which is going to have some sort of tax ramification. So in that sense, like Lisa was saying, these are such powerful vehicles, not only because of, whatever benefit you may get today, you get benefit over the lifetime of the growth, and then you get benefit at the end of the road when you're taking the money out. Financial people get so amped up about all of these benefits.
Very excited.
You just don't see them in other places. And like Lisa deals with people having to deal with tax liability all the time. It can be a real thing, to get it's like, oh, I had a lot of capital gains. I didn't save for that. And now
yes, I was just going to say that in a brokerage account, whether the money comes out or it's reinvested, you're paying tax on it. So in a lot of brokerage accounts, like if you have mutual funds, you get capital gain distributions. When the fund sells shares within there, you get your share of that. Those usually come out at the very end of the year and you're paying tax on them, and you didn't get that money because you're probably putting it right back in, but you have to have outside cash to get that. You can do whatever. And I always tell people, if you want to dabble a little in the market, do it in like your IRA, because it's like, it's not as, you know what I mean? Like just do it over here where it doesn't matter as much. But I just think the other thing is, honestly, in a regular brokerage account, you can take it out at any time. And there's penalties for taking stuff out of these retirement accounts. And so it's good because it's just over here, you saved it, you're not living on it. It's just so good for so many reasons beyond the taxes of like, it's just helping you live on the right amount of money. You cannot reach it without a penalty. Now, if you do not have an emergency fund, and I'm sure Jessica talks about this all the time, put some maybe in your retirement account, but if you don't have 3 to 6 months of necessary business and living expenses in a cash account, that needs to be your number one priority, because you don't want to have to take money out of those retirement accounts and pay tax and a penalty to live. That is just not a good situation.
So we're at 12:45. I want to make a last call for questions. Lisa, if you have a few more minutes, I know I have one more question that I would love to get input on, but I'm going to let people pop one last question into the chat if they have them.
And if people have questions, feel free to reach out to me either through LinkedIn or through my email. I'm happy to have a conversation with you.
Oh, yes, Lisa, while I'm asking my question, if you want to pop into the chat the link to your email list, yeah. I'm on Lisa's email list and it's awesome. I get tax tips all the time. And of course, I follow her on LinkedIn as well, where I can find all of her great advice. But one of the things that I often get asked, I work with a lot of lawyers, and some of them may be promoted to equity partner at some point in their career. And they all have a lot of questions about what to do with their taxes now that they are an owner in the law firm. So do you have some thoughts, Lisa, on, what should folks who are about to go through that transition think about? Should they just think about calling you? What exactly, that's a big transition for a lot of folks. And I would love to.
It's funny you say that, because I work with a lot of law partners, and there's actually a law firm here. Like the joke is like, you make partner, call Lisa. Like it's like the known thing. And I have my opinions on which law firms are better from a tax perspective, because there's one that actually has a fiscal year ending January 31st. And it's my favorite because you get your K1 in May for that year and you can plan. I'm like, oh, go work for that. I'm like, I don't know anything about them, but I like them. So your finances and cash flow change dramatically when you make partner. And really, you should be learning this like a year or two before, so you can make a decision if this actually works for what you want for your life. Style and financial goals. But there's a lot of things that change because all of a sudden you're not a W-2 employee, you're self-employed. So one is, the big one is if you don't have another source of health insurance, you're paying full price for health insurance. Okay. And for a family of 4, it's like $20-something thousand. It is not subsidized at all. Okay. That is a lot of money. Now it is pre-tax, but it's still a lot of money that you're not used to paying. You're also paying your capital calls for the firm. You have very large retirement plan mandatory contributions. Okay? And your taxes are completely different because now you're self-employed. So not only are you have no source of withholding, so you have to give it back quarterly, but you're paying 7.65% more than you are as an employee, because in addition to federal and state tax that's taken out, and most people don't look at their W-2 or the pay stub, but they're taking out Social Security and Medicare taxes from your pay, right? That's half the liability. You're paying half, your employer's paying half. Well, guess what? When you're self-employed, you're both roles. So not only are you paying 7.65% more, but the 15.3%, that's coming off your cash before you're even paying federal or state taxes, right? So it's just a lot of money. Like psychologically, the cash flow is completely different. And I think a lot of the firms, they give you a certain amount per month. And then on the quarterlies, a lot of them will give you a bigger draw out or when things are due, because they know people are not great at managing it. And then also your return most likely is going to be on extension, because you're not going to get this information on time and people flip out. Just, it's fine. There's no problem. But understand, it's non-extension of time to pay. So you still have to get everything to your accountant and make a payment on April 15th, even if the return's not final. It's just an extension of time to file. And not only are you reconciling and cleaning up like the 2020 return this April, you have to pay your first quarter for April for 2021. So once you're self-employed like a law partner, April, you write big checks every year. Like it's just not a good, like it's very big payment money. But a lot of law firms, if you're doing that, remember how I talked about how like your income is not steady throughout the year? I have several law firms that are really good, and they send a memo out every quarter, because the first 2 quarters of the year, they don't collect as much. And so we don't pay much. And they have really horrible payments the other two, but they're paying as they're getting the cash. And so there's a lot more dancing that goes along with it. And there's multiple state returns you're going to have to do. I mean, there's just a lot that goes on, and it's not for everybody. And that's totally fine, right? It's like, does it work for you? Does this work with what you want professionally and personally? But if you don't understand that before you have already made that decision, it's kind of, I mean, I have had people that went back to being W-2 employees, but a lot of them don't. Do you know what I mean? And it's just a very big surprise for people, and surprises are bad. So I'm actually working to develop a program with law firms to kind of come in and do that education annually or semi-annually, both for partners, like I said, those associates years before, so they can do it, or just explain how the W-4s work or other things, because, or really any firm I want to come in, because listen, if your employees are less stressed about their taxes, they're better employees for you. And this is another one of those benefits that you could provide that's not, you know, that's tax deductible for you, that's providing a lot of value for everybody, right? I mean, we don't teach about taxes. Like, it's mind-boggling to me. It's just mind-boggling to me. And I try to make it as fun and painless as possible. I mean, I laugh a lot. I'm like, look, they're just taxes. No one's, you know, it's like people get so, I'm like, they're just taxes. So the therapy part is a huge part of my job.
Yeah, I am the horrible sample set, because federal income tax was one of my favorite classes in law school. Basically, because I was just counting up all of the deductions that I would be able to take if I played my cards right. And and I have to say, everyone who knows me knows my story. I was pregnant with twins at the time I took that class. So you can imagine how many things I was counting up that I was going to be able to take deductions for. But it really is a fascinating area. Lisa, you are such a vast wealth of knowledge and an expert, and I love how you make everything so relatable for everyone. Lisa is in my referral partner network, so whenever my clients are having issues with taxes or thinking about it, she is someone who I absolutely trust to send my folks over to. So if anyone is watching this and is wondering if Lisa might be a good fit for them, reach out to her. She's so approachable and really makes it, she'll take taxes off of your shoulders, but also let you understand all the things that you could be taking advantage of, and maybe you'll love taxes too.
Or at least not be scared.
Thank you so much for coming on. This has been great, and look forward to next month, where we will be talking about your estate plan with Natalie Money Mama Goldberg. I'm so excited for next month. But thanks everyone for joining, and we will see you on the next Zoominar.
Thank you.